Hello, everyone. It's Sean Lee from Unwavering Capital. Today, I'll discuss Doosan, the seventh largest conglomerate in Korea. Began in 1896, Doosan evolved from consumer goods to a diversified holding company. It's highly levered and has cyclical cash flows. ROIC and As a result, its only 2025 and 2% respectively. ROE, its revenue is projected to grow at 9% CAGR. Its revenue is projected to grow at 9% operating margin will expand from 8% in 2025 operating margin to 9% from 8% in 2025. Doosan owns 30% of Enability, which supplies integrated solutions in the fields of power generation. Supplies integrated solutions in the fields of power generation. Through its Enability stake, Doosan also owns 46% of Bobcat, a farm and construction equipment manufacturer. Moreover, the group has 100% owned subsidiary, Electro-Materials, which produces and sells Copper-Clad Laminate. Today, I'll focus on these three entities since they generate 92% of Doosan's total revenue and not discuss its major stakes in disparate businesses such as fuel cell and OSAT. Doosan's net asset value discount notoriously traded below 100% due to financial struggles, complex portfolio, and governance concerns. For example, in 2024, Doosan attempted to merge Bobcat into robotics, shifting economic value away from Bobcat's minority shareholders and into a vehicle controlled by the Doosan founding family. This would have strengthened their succession planning. However, due to the regulatory and market backlash, the merger plan was withdrawn. However, the company has narrowed its net asset value discount to 60% because it unexpectedly announced a cancellation of treasury shares in February 2025. Historically, treasury shares were used to protect founding families' economic interest. But the bigger driver of Doosan's narrowing conglomerate discount is Korean Congress's effort to empower minority shareholders and lower dividend tax rate. As I alluded earlier, Electro-Materials division produces and sells CCL, which is a critical substrate for printed circuit boards. Although the 100% owned division only contributes 11% of Doosan's total sales, it generates 41% of its operating profit. I predict that the CCL business will grow at 17% CAGR through 2030, powered by insatiable demand for AI, and will form 51% of Doosan's total operating profit due to higher ASP of high-end CCLs. Now I'll discuss the division's sales by application. Unlike the sell-side consensus, my estimates indicate that by 2025, 59% of CCL sales will be network boards, driven by surge in demand for AI accelerators and 800G switch. Meanwhile, semiconductor CCL, also known as package, will contribute 13%, supported by increasing demand for memory chips such as DDR5 and GDDR7. Since last Tuesday, Samsung was requested by NVIDIA to double GDDR7 output following B40 order. Package will grow at 19% CAGR. In addition, flexible CCL, which is used in foldable smartphones and wearable devices, will make up 12%. As Apple is widely expected to release their foldable iPhone next year, FCCL will likely grow at 7% CAGR through 2030. Lastly, low-end CCL, which is used in TV, PC, and home appliances, will represent 16%. It's worth noting that Doosan holds over 40% market share in 400G Ethernet CCL market and is securing a technological edge in the 800G segment as well. I expect Doosan sales of CCLs for 800G Ethernet applications to grow by more than 8-fold in 2025. My research indicates that Doosan CCL capacity across its 5 factories were 23 million units in 2024, and the average utilization for 2025 is 99%. Furthermore, CCL delivery times have extended to about 20 weeks. Moreover, Doosan will spend over $720 million in facility expansion and M&As to meet robust demand for its AI CCLs. I expect AI to form 43% of EM's total sales in 2025. Let's now discuss CCL cost structure to explore Doosan's bargaining power. Hyper very low profile copper foil is a high-end material that's used in AI accelerators. Given that Lotte Energy Materials exclusively customizes HVLP4 to Doosan, copper foil accounts for 39% of CCL cost, and Doosan is a price taker. However, for epoxy resin, which adds up to 26% of CCL cost, the producers have relatively less pricing power over Doosan given its scale. Lastly, glass fabric, which forms 18% of CCL cost, is a concentrated market where Japanese players like Nitobo and Taiwanese suppliers have more leverage over CCL makers. Now that I've explored Doosan's negotiating power over suppliers, let's now look at the dynamic with its customers. With the rising competitions from Chinese competitors and highly concentrated customers, there is low switching cost, especially in the low-end CCL where incumbents can't differentiate themselves technologically. For instance, as SemiAnalysis indicated, Doosan had to solely rely on lowering its price to gain Blackwell as XM market share from EMC. However, Doosan, which gradually focuses on the high-end CCL, dramatically increased its bargaining power as the exclusive supplier of MA-grade CCL for NVIDIA's GB300 compute tray and Bianca interconnect boards for NVL72 system, and as the dominant supplier of HGX, Blackwell, and GB200. Once Doosan expands its production capacity, it will also gain market share in switch chipsets and switch boards for NVL72 in the second half of 2025. I estimate Doosan's market share in GB200 to 300 and B200 to B300 series to be 37%, while Taiwanese competitors like EMC has 50%, eTech has 7%, and TUC has 6%. The source of Doosan's competitive advantage stems from having an industry-leading product with lower dissipation factor and lower dielectric constants. Since its competitors currently have inferior products and NVIDIA prioritizes reliable and most advanced supplier, I believe Doosan will continue to be the primary supplier for NVIDIA's compute tray. Doosan will also continue to command pricing power because once a NVIDIA or AMD substrate vendor qualifies material, it can take 15 months to qualify. That said, Goldman Sachs thinks EMC will capture 43% market share of AI GPU CCL TAM in the future. Specifically, Goldman Sachs predicts EMC's 70% market share in switch tray for GB300 to recover to 100% share in the Vera Rubin generation. The broker also estimates that EMC will capture 15% market share in M8.5 computing tray. Their prediction could turn out to be correct given that currently only EMC and iTech have reportedly passed M9 grade CCL for AI servers. Since Rubin's design is still only in the early stages, the CCL specifications are expected to be finalized around July 2026. It will be critical to monitor who captures the lion's share of Rubin market because its TAM is forecasted to be $2 billion in 2027. Even though Doosan has a risk that competitors will ramp up their technologies, all the players will have huge tailwind for high-end CCL because its TAM is expected to grow at 26% CAGR through 2026. The primary reason for the robust demand is that the new NVL72 system will result in 15 times more usage of M8 grade CCLs compared to the high predecessor DGX H100 system. As the penetration of M8 and M9 grade CCLs jump from 40% in 2025 to 70% by 2026, capacity constraints for CCL suppliers, we can expect extended lead times and rising average selling prices. Another reason for the rising AI market growth is due to a surge in demand for AI application-specific integrated circuits in which EMC dominates. For example, EMC is the primary ASIC supplier for Meta, Microsoft, and xAI. As for Google TPUs, Panasonic and EMC each commands 50% market share. As for AWS's Trainium chips, EMC and TUC supply 75% and 25% respectively. Leveraging competitive advantages in high-speed material technology and diversified capacity layouts, EMC aims to capitalize on opportunities within the four major US cloud services providers ecosystems, alongside TUC and ITech, to capture greater market share. However, news recently announced that Doosan passed Amazon's quality certification and is expected to begin mass production in Q3 25. Moreover, Doosan is also reportedly undergoing certification with Marvel and Google, which may drop Panasonic due to quality concerns. If approved, production for Google could begin in early 2026. I believe that hyperscalers will continue to diversify their ASIC CCLs for bargaining power and supply risk purposes. Thus, Doosan ASIC CCL business will have a long growth runway as TSMC's allocation to GPU and ASIC will be adjusted from 7 to 3 to 6 to 4 by 2026. I'll now talk about Enerbility, which is Korea's largest power equipment and energy solutions company. It contributes 41% of Doosan's total sales and 52% of its total operating profit. I'll elaborate on the revenue composition. 26% of Enerbility's 2029 sales will be derived from the design and construction of nuclear steam supply chain system and steam turbine generator. As one of the very few companies globally that can manufacture all four core nuclear components, Enerbility has 17% share in the global nuclear power plant equipment market. Furthermore, Enerbility is positioned to win up to 43% of over 400 planned nuclear projects globally and benefit from growing interest in small modular reactors. Since the capacity of nuclear energy is expected to increase by 2.5 times by 2050 compared to 2023, driven by the global efforts to achieve carbon neutrality, Enerbility has a long growth runway. Moving on to the next revenue driver. I'll now explain gas turbine equipment and services business that will represent 35% of Enerbility's 2029 sales. Although the H-class gas turbine market is dominated by oligopolies like GE, Siemens, and Mitsubishi Heavy Industries, Enerbility has managed to gain 10% share, backed by strong domestic policy support. With the rapid expansion of data centers and increasing electricity demands, Enerbility's gas business will have huge tailwinds. Lastly, Enerbility will derive 38% of 2029 sales from offshore wind power, fuel cells, civil engineering, and construction, as well as casting and forging. Let's now explore Doosan's third main business, Bobcat, which is a global compact construction equipment manufacturer and distributor for construction, landscaping, agriculture, ground maintenance, utility, and mining industries. Its revenue represents 41% of Doosan's total sales, and its operating profit constitutes 52% of Doosan's total operating profit. I'll now discuss the sales mix by products. As the first inventor of skid steer loader and all-electric compact loaders, Bobcat derives 53% of its revenue from compact equipment. Within the compact track and multi-terrain loaders, Caterpillar, Bobcat, and Deere collectively generate 51% of market revenue. Its competitive edge stems from having more than 1,500 dealerships in North America, delivering industry-leading support to customers in their local communities. Secondly, Bobcat gets 17% of its revenue from parts and attachments because it offers the most attachments across 100 categories in the industry. Thirdly, Bobcat takes 16% of its revenue from material handling, such as warehouse equipment and forklift. Compared to premium Japanese OEMs and low-cost Chinese suppliers, Bobcat positions as a strong mid-tier challenger. It's especially effective in emerging markets and among small operators who want global service without paying premium price. Next, Bobcat obtains 14% of its sales from ground maintenance equipment. Since groundskeeping customers are often the same small contractors or municipalities already buying Bobcat loaders, it has strong cross-selling opportunity. Lastly, Bobcat procures 5% of its revenue from portable power such as air compressors, generators, and light towers. Bobcat's edge in this sub-market stems from its push into battery-driven portable power because it aligns with construction sites trying to cut diesel emissions. Finally, I'll talk about the valuation. I use the DCF for Doosan because I can explicitly account for reinvestment needs such as capex and working capital. I can also model cyclical swings rather than relying on a static multiple that might over or undervalue the firm depending on where it's in the cycle. Moreover, I can penalize companies high leverage through higher WACC, and I can perform DCF for each major segment and then sum them up for a consolidated sum of the parts valuation, which is appropriate methodology for a conglomerate that's known to spin off subsidiaries. Lastly, since Doosan and Ability has multi-year project backlogs in power generation, this gives visibility into future revenues and cash flows, making DCF feasible and reliable. I will note that the stock has 25% upside and the return on invested capital is projected to return to 15% by 2030. For that, thanks for watching. I'll see you next time.